Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is December 13th, Friday the 13th, and we've got a packed episode full of an unfortunate milestone in Rocket Pool, rETH in DeFi, a whole lot of DeFi stuff actually. On the staking news side, we've got client updates and changes that will be coming in for Fusaka, and on the Ethereum side, we're going to be talking about developers, also a whole lot more. So let's get started.
10, 9, ignition sequence start, 6.
And we're going to start here with this unfortunate milestone that we hit. So this was Ramana sharing news of the mini pool queue hitting 400. I was about to say 4,000 then. So a couple of node operators spun up a whole lot of validators, and the number of mini pools that we have waiting now have hit 414 mini pools. So we have space now for nearly 31,000 ETH in the deposit pool. So as I always say, if you know anyone with 31,000 ETH who want to stake it, please send them Rocket Pool's way, and we will do that all pretty much in one transaction for them. Yeah, this is not good. There's no way to sugarcoat it. Sadly, it looks like, demand for staking is kind of low right now. People want to keep their ETH liquid, and by keeping it liquid, they want to try to, time the market or sell their ETH, potentially swap their ETH into other tokens, trying to outperform ETH in the bull market. And the number of people who want to stake their ETH overall is kind of going down, and that's shown by outflows for a lot of staking protocols. The one that is actually doing fairly well still is EtherFi, and that's because they've got incentives coming out the wazoo, as they say. They're doing another campaign for Christmas. I think that is spending $1 million or something like that, in incentives. So people are trying to get in on that, but otherwise, even like Lido has been pretty much neutral this week, but others have been going down. So that is not, what we want to see with the Rocket Pool. Of course, we want to see growth and more deposits. Sadly, that's not happening at the moment, and it looks like we might have, well, hopefully things will turn around soon, but we'll just have to wait and see. Okay, so getting some incentives, getting some rETH minting happening. One of the best ways to do that is to promote rETH in DeFi, and here we have the bi-weekly update on rETH in DeFi. This is from Stake Rocket Pool, and Regex Buster is the one who puts this together. And he says Aura Finance's LP for rETH is maintaining its high APR from 2 weeks ago. It's currently 100% APR. You check it out, and always do your own research before using any pools on rpldefi.com. And it says, anyway, welcome back to this risk optimized DeFi update. So this is the RPL rETH pool. It's a 50-50 pool, and like I said, it's like they said, it's giving 100% rewards, and that's been the case for the last 2 weeks, where they've had like huge rewards. Going off from that, like usual, some of the best places to park your rETH. On Base, you have in Base you have Balancer that's paying rETH, wrapped ETH around 10 to 12%, 8 to 12%, and yeah, that's looking pretty good. That's the best on L2s. And then on mainnet, there's some good rewards here as well. PancakeSwap actually has gone down a little bit. It's down to about 4.66%, and Balancer now is at 6%. So that's with farming the Aura rewards as well. But like I said, there's some pretty good rewards out there that you can use. And here, this is the active strategy. This is Balancer rETH RPL. The one that we just said is 99.5% APR. However, there is an update about that Balancer RPL pool, and that is from Val. He says this pool's APR is going to go down. IMC strategy is no longer incentivizing that pool, and there's a link to the IMC strategy. He says that there still is a little bit of juice there, but it's not going to last for long. And this is the new RPL strategy that, in case you missed it when I talked about it a few days ago, the idea is to make a protocol-owned liquidity pool with concentrated ranges for RPL, and we're going to be adding liquidity to that in the coming days and weeks. And hopefully this will actually add some nice liquidity to RPL on the markets, because it looks like there's not much on-chain liquidity right now for RPL, most of it being through centralized exchanges like Binance, Mexi, and others. So yeah, if you want to read the information from Val, you can go and have a look. We covered this on Rocket Fuel before. Okay, next we have this other integration for rETH. Yeah, and this one is Primex are saying that they've integrated rETH into available strategies on Ethereum mainnet, Arbitrum, and soon on Base. So the key benefits are they're exploring a wide range of strategies with the initial addition of rETH. They benefit from the security and decentralization of Rocket Pool. So this will be available on multiple chains, including Ethereum, Arbitrum, and soon Base. I have never used Primex Finance ever before, so I don't know anything about them. I don't know how it will work. So please do your own research. It looks like the replies got botted, but fair enough. Yeah, but I've never used this. I've never used this before, but definitely give it a look if you are interested in putting your rETH to use. And I don't know what they have to offer or not. So check it out yourselves. Okay, next we've got some more information about rETH, and this is from Factify. Again, I don't know anything about Factify, but this tweet was put out with some information about Rocket Pool, so I thought I'd give it a shout out. So they said that Rocket Pool is securing $2.9 billion of ETH with 90,000 rETH holders. That's a lot. I didn't know it was that much, and also 3.8 thousand nodes. We don't actually have that much, but I've talked about that on Rocket Fuel a whole lot. Anyway, it says not only does Rocket Pool enable trustless and custodial staking, but it's also a key DeFi liquidity pillar. So on Arbitrum, for example, there's $50 million dollars of rETH, generating $1.5 million a year for its holders. And then there's a primer here. So the first thing that they show is the Ethereum protocols, Ethereum Foundation, website details about Rocket Pool and showing how it's all green. I don't know why the execution diversity one isn't green. It really should be green, but the rest of it's all green, which is pretty cool. And then they talk about how rETH represents ETH in liquid staking, like all the stuff we already know, and how you can get native yield, but then on top of that, you can get yield in DeFi strategies. And then they've got some, they said that they said stay tuned for rETH plays and opportunities. So hopefully they'll be pumping out some information about that, yeah, it might be that they are integrating rETH into Factify, and again, Factify is a protocol that I'm not familiar with, so please interact with that at your own risk. Okay, next, there's a little bit of hopium here, or maybe delusion, but Joel is someone who I don't know, put out this thread about RPL, saying why RPL might be undervalued and its potential in speculative Ethereum cycle. So the key thesis is that Rocket Pool appears significantly undervalued based on its total value locked and its current market cap and its critical role in Ethereum staking. So Joel's really pushing RPL here. So the first thing he says that RPL is undervalued because of its TVL to price ratio. So he's using these charts here basically that show that as market cap went up, as TVL went up, market cap kind of went up as well, and there was some mirroring happening there. But then in the summer of 2023, that relationship broke. The market cap for RPL went down, and the TVL for Rocket Pool went up. Now, when you add the token price to that, it's kind of mirroring but there was periods where it was overlaid with the TVL, but then it broke down as well, probably somewhere around beginning of 2024. So I think basically what Joel here is saying is that the TVL to market cap ratio is 8.47, and that's conservative market pricing. And he says that basically what it should happen is that the ETH price will go to 7,000, and Rocket Pool's TVL grows proportionally with ETH's price and increased staking adoption, reaching 10 billion. And market cap aligns closer to TVL, reflecting speculative inflows. So he's saying that with a TVL of $10 billion, market cap will be $10 billion. The RPL price divided by 10 billion should be $478 per RPL token. With that, the current price they're saying is 1665, so that will give us a potential upside of 28x from here. And the risks are regulatory uncertainty, but that's kind of going away maybe with the Trump thing, and then market dynamics speculative cycles are unpredictable, highly volatile. So yeah, this is some real grade A hopium right here with $500 price target for RPL in this bull market. I I would be very, 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 very surprised if RPL hits $500 or even $478. But hey, I'm not going to complain if it does. Okay, moving on to some staking news now. We've got some updates from some of the clients here, and the first one is Nimbus. So Nimbus have consensus layer client update for Nimbus version 24.12.0, and they said that this is low urgency release, and it just has some improvements for bootstraps. So bootstrap node specification update. So you can wait for that if you want. Nethermind, however, has an important update for Linux system MD users. So major highlight, this is startup logger fix. So fix an issue with 1.30 where Nethermind crashes on startup if the Nethermind process doesn't have write access to its own directory. So there was a little minor bug, I guess, there that only impacted a small number of people, but 1.30.1 will fix that for you. Okay, here we have Yorick, or Thorsten, as he's also known, putting out some information about the Fusaka upgrade, and that's the hard fork after Pectra, and talking about how it's going to impact staking and requirements for your hardware. So Thorsten says, PIADAS is confirmed for Fusaka, the hard fork after Pectra. PIADAS increases CPU requirements. To mitigate, I'd like to see Portus's payload block separations shipped with PIADAS. For home solo stakers, having 9 seconds to compute instead of 1 to 2 seconds would be huge. So Thorsten says, clarification, PIADAS is the current focus of Fusaka. It's obviously not SFI, because Fusaka hard fork is not the point in its life cycle. But let's continue with the discussion about PIADAS and CPU rather than the finer points of what confirmed means. So I think that's a really interesting point. And then he gets a reply saying, apart from PIADAS, Fossil seems to be a no-brainer for Fusaka. I've lately warmed up to the idea of PBS plus Fossil instead of ePBS until we have clear scope for APS. That could save touching things twice. So what Thorsten here is saying is that, or Yorick is saying, is that as you introduce PIADAS, it's going to change the requirements for your CPU. It's going to basically need a little bit more juice. And this Portus has an idea of an EIP that will make it a little bit easier, well, a lot easier potentially for the your staking machine to verify the blocks that come to it, basically. So that's actually a really nice idea to get that discussion going. And then Yorick, of course, was in the Rocket Pool Discord kind of talking about this. So he says, by how much does PIADAS increase CPU requirements, Yorick? So much, bigly. He says, that's not useful. Discuss this with the Ethereum Foundation and understand that having a benchmark beforehand that specifically tests the cryptography path would be invaluable to home solo stakers so they can see whether their Nook, Proteus, or their Potato holds up. The point being, with payload block separation, we will have 9 seconds to compute this stuff instead of the current 1 to 2 seconds, and the current hardware would definitely keep up. So that's what he's saying, is that it will help current home stakers as much as possible. And then this, of course, Fusaka, the earliest it would come is the end of 2025, most likely in the first quarter of 2026. We will have, the hard drive itself shouldn't be too much of an issue, because we will have the 2 terabyte limit hopefully should hold. Because on May 1st, we'll have the state expiry for pre-merge stuff. So that should open up a lot of space for node operators from home. So then Thorsten was just kind of talking about, what will be future-proof, what won't be future-proof. Here Mick says 9 seconds to verify the proposal, but if the CPU requirements are increased by 10x, so the idea is that it might even take longer than the 9 seconds to get everything verified. But I think that's just for potatoes, really. I don't think it'll have an issue with, the newer Nooks. And when I say newer, I mean Nook 8 or 9, basically, I think should be fine, but we're going to find out over the coming year, I guess. Okay, let's talk about Ethereum developers. So this is Ethereum news now, and one of the big areas of discussion yesterday was this report from Electric Capital, and they've got their 6th annual report that's come out. And one of the screenshots here was doing the rounds yesterday, but we'll kind of have a look through the report as a whole. So Maria says, we analyzed a record of 902 million code commits across 1.7 million repositories, thanks to 829 people who contributed to making this report since inception. So this is how did 2024 in crypto look in data. long thread below. So the takeaways, they have the developer trends, global adoption, chain diversification, and use case diversity. You can go and have a look at that. But some of the key information that they have is that crypto developers grew 39% per year since 2015. So that's 39% per year, so 39% each year. So it's a really strong growth factor there. And monthly active devs are marginally down compared to last year. And those who've been in crypto for 2 more years has grown 27%. So this established developers push the industry forward because they push 70% of the code commits. So how's crypto changed since 2015? So globally, devs have gone down in North America, they've gone down in Europe, but they've increased in Asia, Africa, and South America. And in Oceania, it's pretty much flat, although that's gone down a bit too. And then Asia is number 1 by crypto dev share. And then here they have the ecosystems by the different continents. So in Asia, Europe, North America, Africa, and South America, Ethereum wins out in all of those. Solana is number 2 in all of those. However, number 3 is actually different in those places. So that's really interesting to have a look at. In terms of the countries for crypto development, it's the US, India, United Kingdom, China, and Canada. And then the US is number 1, but it's been losing developer share every year. Now, in terms of country, Ethereum is number 1 in all of them except India, where Solana is number 1, and then Ethereum is number 2. So that's interesting to see. And then there's for new developers coming in, it looks like more new developers are going to Solana than anywhere else. So there's this chart here this is the chart that caused some waves. So in terms of new developers in 2024, Solana had 7,625 new developers. Ethereum and its ecosystems had 6,500 or so, I think. And then there's a long tail down there. So that was actually something that a lot of Solana manlets jumped on yesterday. So yeah, like the idea is that your chain is as strong as the developers that you have, and Solana looks like it's attracting slightly more new developers than the Ethereum ecosystem is, and that's a cause for celebration for them. However, as this report said earlier on, is that it's those developers who've been making commits for 2+ years are the ones that do the majority of the work, and of course in those numbers, Ethereum is way ahead of everyone else. Now, I'm not just saying that as cope, we really do need to make Ethereum better for new developers and encouraging them to come to Ethereum. We do that by building better apps, by having better tooling and all that good stuff. But this is definitely, something to pay attention to. And then Josh Stark here says that he loves this report every year. Josh Stark, of course, works at the Ethereum Foundation and is, as far as I understand, very heavily involved in how the Ethereum Foundation operates and works. So he says with past years, developer data shows both Ethereum's dominant position and the ways in which the Ethereum ecosystem can grow and improve. So he kind of pointed out some of the same charts that I just looked at, showing how Ethereum is doing really well. But then in the area of new developers, like he says, for the first time since 2017, another chain, Solana, attracted the most new developers. He says these are defined as devs who made their first contribution to a repository during the year. Note that the total for Ethereum below includes L2s, even though the L2s are also included on the graph. So this is what can Ethereum ecosystem take from this. It says at the very least, it's a reminder that we cannot be complacent. Ethereum will always have competitors and will always have to work to keep Ethereum improving as a developer platform, growing mindshare and advocating for its distinctive values as a decentralized and credibly neutral chain. Blockchains will not have the positive impact on the world. We are working towards centralized chains, even those controlled by corporations or governments end up dominating. In this case, it seems like Solana's growth in new developers primarily comes from Asia. What needs do these developers have that aren't being served by Ethereum ecosystem currently? Yeah, and then here there's a reply saying that those devs are likely to be more concerned with profits instead of ethos. But of course, that you can't, generalize like that, and that's what Josh says as well. But and then there's the idea that Rust contracts makes it easier for traditional developers to jump in, partly why Arbitrum Stylus might be good for Ethereum. So that could be a reason as well, is that the tooling in those languages is just what people are already used to. Okay, moving on, we have some news here from Vivek Ventures, and I don't know if this is news really or just speculation, but I'm gonna take it. Well, it's speculation really, but I'm going to take it as if it's news. So it says U.S. strategic crypto reserve will likely include Ethereum. There is mounting evidence that a national strategic crypto reserve will include ETH in addition to BTC as its core holdings, and here is why. So he says Trump wants the U.S. to be the crypto capital of the world. No, he says crypto, not Bitcoin. Strategic petroleum reserves for crypto. I think so. Trump said we're going to do something great with crypto. ETH is digital oil, and then there's here Vivek's talking about how Donny's buying ETH and ETH ecosystem tokens through the World Liberty Financial stuff, and then talking about how ETH is of strategic importance because of stablecoins and how it has the most stablecoins by far and real world assets. And then USDT is now mainly on Ethereum, and all the others are mainly on Ethereum as well. And then it says game theory is like all roads flow through Ethereum. There's a Game of Thrones going on with new carte blanche for crypto, but all regulation needs to involve ETH. There's no path for a new ADA or XRP or other layer 1 ETF right now, a strategic reserve asset without ETH succeeding first. And says ETH will be included in any strategic crypto reserve alongside BTC. The US doesn't just hold a gold reserve, it holds oil and other commodities in reserves too. This prediction seems out of consensus. And then, so this is actually really interesting. You can read the whole of the thread. And basically Trump holds ETH and makes it so he'll enrich himself probably. EigenLayer have got a new proposal out here. So this is EigenLayer improvement proposal number 2, and this is for slashing. So they are wanting to put forward slashing onto EigenLayer, and this of course would punish bad actors and make it so they lose their capital if they perform badly. And it looks like this is going to go ahead soon. So they're going to put it on testnet in the coming days and see how the ABSs can react to this and how that might change rewards. And finally, some other news here. A Bitcoin investor was sentenced to 2 years in prison for evading taxes, and this marks the first crypto tax evasion case. So for once, I'm actually going to give you some financial advice, and that financial advice is that you should pay your taxes. Please, 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 please don't try to get away from your taxes if you're in the US. You will eventually get caught. And the problem with taxes is that if you make a mistake, you can go back and fix them. However, if it's deemed that you were trying to be fraudulent with the IRS, in that case, what will happen is you could go to jail for a very long time. So here, this person got 2 years in prison. That's not fun. Please don't be in that situation. Don't think that you can get away with it, especially in a fraudulent way. And because then there's no statute of limitations for that, like I said, so you could end up going to jail. So please pay your taxes. And on that note, I'm going to end today's episode. So I hope you all have a lovely week ahead. Please be good to everyone. Have a good weekend. Hopefully the crypto prices treat as well. It looks like Ethereum's trying to break that 4,000 number. Let's see what it does this weekend. But I'll see you on Monday. Bye.